Welcome to TradeTheMBA.com. This is John. This report is for the 16th. Well, tax day was ugly, and the market responded. Well, you could claim it's that. You could claim it's the fact that Israel might retaliate against Iran. You could claim the fact that the economy has shown lots of cracks and is starting to fade, or that we've been in a continued short configuration since we broke below the ABM yellow. Pick your theme. That's the whole point about narratives. They're stupid because just trying to justify why they think a thing happened. But at the end of the day, you could even argue it's the gaslighting with all the fake numbers that we keep seeing coming when you use estimates for inflation versus the actual inflation. You know, even better, even like the beautiful climate change ones where the NOAA whatever announced that global warming's still on its way, but the fact is that more than half their sensors they don't even take data from because they don't work. They just estimate. So your global warming has been an estimate for all these years. How wonderful is that? So this is the world that we live in, and it doesn't really matter because what we do is follow the readings. And money always tells us where everything's going. We had the breakdown of magenta under yellow. Back over here, yeah, fine, continued. We knew that it was going to start to accelerate. We saw white MBI poke back above. Things were holding on fairly decent as long as you were above the ABM green here. Once we broke below the 76%, though, I pointed out that my expectation was a move to the 50. We didn't hit the 50 and broke through. There was nothing that we were seeing from readings that would suggest that we were going to get any kind of support going through any of this. And it was pretty clear. We're still in a weak point when it comes to DOC, not quite at the reversal level, but close. But the continued negative shakeout and the fact that we'd stay below the red line on the extreme. Well, those were pretty clear indications that there wasn't going to be much support. And the reality is, everybody knows that markets fall 66% faster than they rise. And when that exit starts getting narrower and narrower, it gets harder and harder to get out at a reasonable price. And then you start taking anything you can get. And that starts to lead to that exacerbation. Some think that maybe there would be this idea that people would want to jump in and save the bottom. No, not in the face of uncertainty of how severe will Israel's response be, whether that's going to lead to a broader escalation. There's just a ton of dynamics unable to answer. And then throw in the economic indicators that are really not pleasant and looking rather ugly from a broader standpoint. You throw in the political aspect of it. Trump's on trial. It's a kangaroo situation. You kind of feel like you're in this circus. But from an NQ standpoint, we're just filling positive extremes. So there's still a couple more to go. So you got to come back all the way to here. So it's not done yet. The numbers aren't going to lie. The market's going to continue to do what markets do, and the broader players, what they're looking for their bigger move on the extremes, they're going to get it. It's just they're not in that same mode of it's got to happen immediately. You have short-term, mid-term, and long-term ranges for each of these things, and they do it. Rates, the bond market waking up to the realities that all of their rosy sunshine of the Fed cutting into oblivion and bringing back zero rates a little further off than they had hoped. So deal with that construct as well and wake up. And the reality is you're still not where you need to be to attract yield given what inflation is, but that could attract some safety because of the growing concerns. At the end of the day, money is still going to be moving into commodities. Oil didn't really do a whole lot, and this is pretty modest given what the potentials are. You've already seen the Red Sea closing. You've got a situation where Iran could really escalate things, and oil production shut down. You could see oil over 100 so fast you wouldn't even blink. What will that do to inflation, do to the economies of the world, no less? Yeah, everyone's holding their breath on that one because that would be ugly. You know, those who thought the euro could hold on, that was always ridiculous. But they can make their plays in between. And at the end of the day, everyone says that the dollar is going to be collapsing, but all the currencies that are based on Western concepts are having the same thing. You're losing purchasing power. So yes, it's the death of the dollar, but relative to the others, it's still a leader. So you got to sell those euros to buy oil and a lot of other things. So at the end of the day, you want to buy commodities, you're going to convert your euros into dollars to buy those. So It's just plain and simple. At this level, a little bit less, and you start to get really difficult holding the euro above parity. Previously, it had always been right around that 104 range that things really get catastrophic and central banks have to intervene. But you're close to that at this particular stage. Will they intervene to the same level? I don't know that they can to the same extent. They're going to try. Gold was fairly muted, staying underneath its highs in that. But again, that's your safe haven. Even at these values, it's still uh, outperforming everything else, even cryptos at this particular stage. Usually, you get a little bit more of a trade off when there's that kind of deep selling. Didn't quite happen. Everyone was excited about the idea of Hong Kong ETFs. A lot of hype, not a whole lot of action from it. Usually you get sell-offs within the cryptos in those spaces to cover losses and that when the markets fade as dramatically. I wouldn't call that really that all that dramatic a fade, but potential is for it to escalate and cause more resources to be needed, and that usually will have an impact on how cryptos and or even commodities in a lot of cases trade. But in this case, with the uncertainty situation, the commodities of gold and that definitely have to rise. Literally just filling back positive extremes. And still got a couple more to go. I mean, all the way down to the 53 range from a Bitcoin standpoint. I think ETH is filling out most of theirs a little bit earlier. It's already filled in that section. You got a couple from going back to the original breakout. So, the swoon, the jump, we just follow what the readings are. I talked about this the other day, the consecutive lower highs, meaning there was difficulty getting things back to where they were. There just wasn't enough excitement. You had moved past your buy period with all of the new fund money coming in, and then you get into a corporate lockout time. So it wasn't hard to see that you just didn't have the energy to keep things up. We had the NBI white spike up at the peak. Once it closed below the magenta under yellow, that was the beginning of it all. And then we ended up with a white spike below the 50% again, above magenta there. Tried to make a brief little attempt, but still hit the zero. And then the NBI white stayed in the lead. And it is again, and that will continue to generate new lows. This is all straightforward stuff. There's nothing complex about any of this and no change. This started pre-market just before the open and led all the way through. And then it just accelerated by midday when they realized there wasn't anyone coming to the rescue. Because what are you going to come to the rescue when you still have more uncertainty? Until the Israelis do their counterattack, you just don't know. So wait and see kind of aspect, but wait and see always means exit first, ask questions later. You can always get back in another time. That's the long and the short of it. Anything relevant, I'll get on the Skype chat, but I think it's all good. We're pretty much on target with exactly what the readings are and just following where the money goes. And that's always the answer. Have a good one. Trade well. Look for me on the Skype chat.